Senseonics is on the radar of Wall Street bets for a short squeeze. Is it a buy or not? Let's find out in this video. And this is the article I'm talking about. Meme stock traders start to converge on shares of insulin pump maker Senseonics. And this is the gist of this article. Social media volume up 600% according to Hype Equity. There are now websites tracking social media presence for stocks and cryptos and many things like that, and they now have a very big importance for traders because they know if that stocks are there mentioned many times, it means that there is a very good chance they will be under scrutiny for a short squeeze or for a pump. So let's have a look at this Hype Equity, and this is Hype Equity and it's free, guys, so have a look yourself. But in terms of trending stocks for today, that's today over here, Senseonics is 800% up in terms of social media and then 120% in terms of volume. Just a quick disclosure, I've already bought Senseonics a long time ago, and to be honest, my subscribers and Discord members know everything about my trades. My Discord group is free, so subscribe and join it. The link is in the description below. But apart from that, what are we looking at in terms of options? Because that's so important, you know, that if options are up, that would also mean a higher chance for the stock to either go up or go down. A lot of volatility basically. And this is bar chart, so let's have a look at it. If you scroll down, we see that there is an increase in volume for the calls, and it's over here on this bar. I hope you can see. Let me actually zoom in for you. As you can see, everything is up quite a lot. The minimum is 13% up. Even the $4 strike price is up 25%. Instead, the puts are actually down. There are actually some puts for $2, but overall they're all down or unchanged. So it seems that options are actually pointing to what Wall Street Bets is actually hinting at. And so what are we actually need to look at to make sure we actually have the short squeeze? Well, it's obvious, the short volume. And this is again short volume. So if we scroll down, we see that today the short is actually not too bad. You see it's been going up and down, up and down, up and down. That's Senseonics, by the way. And last week it was around 50%. Now the one thing that we need to think is that this short volume is allegedly not right. Hopefully you know everything about dark pool and synthetic shares and stuff like that, but in a nutshell it means that the short volume is actually incorrect because the same share is used to short the market multiple times, and that means obviously that the short volume that we see in these charts is probably not correct, and the SEC is actually looking into it as we speak. More on that in the further videos. But now let's have a look at Senseonics from another point of view. Is the company good in terms of fundamentals? First of all, let's look at the products that the company is launching and actually making money on. So Senseonics gains on the study result for glucose monitoring system. This news came out just few days ago, and basically the stock got pumped for the promised study evaluating the accuracy and safety of the next gen Sense glucose monitoring system for up to 100 days with reduced calibration. And what that meant is that this monitoring system is actually attached on your skin, and I'm gonna show you in a second, is actually attached on your skin, like in this case, as you can see on the screen. This is 90 days without having to do anything, without having to charge it or swap it and so forth. What they are looking at is a machine that actually can last up to 180 days, basically double what's currently in the market. And from a financial point of view, obviously we also have to look at that if you want to buy for the long run, and that's what I hope you're looking at as well. I'm a long-term holder, and if I'm buying, I'm not gonna do it for a short squeeze. Potentially, yes, I might actually do it for a short swing trade, but overall I'm more of a long-term trader because I believe in good companies. And so let's have a look at the financial data. Now this is the latest quarterly report, and the very first thing that we absolutely need to look at is the quick switch before we actually move forward is the cash. The cash is over here and it's $178 million versus what it was in December 2020. It was only $18 million. So it obviously went up about 10 times, and that's obviously obviously very good because I'm gonna show you later that the company is actually doing very well. So if we scroll down, we see that the very first thing that jumps out, these are the revenues for the latest quarter ending on March the 31st. The revenues went up quite substantially from 2020, and that's when I bought it. So we are basically up over 100%. The company has made $2.8 million in 2021 versus far less than $1 million, basically no revenue whatsoever in 2020. So that's very promising. And even more promising is the fact that there is now a gross profit versus basically a massive loss in 2020. And this is another bit that is very, very important. The cost of sales, and we're talking about marketing cost, is actually going absolutely down, and that is on top of making more revenues. So that's another thing that this company is doing much better this year versus last year. And this is what I was talking about. So sales and marketing expenses, it was 1.6 million in 2021. It used to be $11 million in 2020. They really got it wrong in 2020. I'm not sure what happened, but now the company is stronger than ever, even compared to when I bought it in 2020. And by the way, all my trades were disclosed with my subscribers and my free Discord members. And if you want to get yourself, the link in the description below. And so in terms of revenue growth is actually going okay, but I mean, what I showed you was more of a snapshot this year versus last year. What I'm gonna show you now is a snapshot that actually includes from the inception of Senseonics till today, and you can find this on macro trends. So if we scroll down, we see that this is the quarterly revenue, and as you can see, it was going very well in 2017, and it was growing quite a lot, and it was going very well in 2018. It then plummeted in 2019, not very good at all. It had a massive and very strong ending of 2019. I guess most of the revenue got like rolled over and included in the latest quarter of 2019. 2020 was an absolute disaster for this company, so it doesn't really work well with COVID. As I told you earlier, it's about glucose and diabetes, stuff like that. That's the kind of things they are working on. But then we are moving on to 2021, and we see that overall it's doing very, very well, in spite of obviously COVID still present and weighing on the economy. And I've already bought Senseonics because I know that the company will have strong revenues going forward, and that's why my subscribers and Discord members knew about it. So now let's have a look at these very strong potential projections. And this is stuff that you can find on Seeking Alpha. So again, I just wanted to show you that this is Senseonics. So if we scroll down, we see that the consensus revenue estimates is for December 2021. So we're talking about the end of this year, 13 million versus what we actually made last year was absolutely nothing. Basically, we made zero. So we actually increased so much. December 2022, next year, basically 32 million. It's an increase of basically 139%. And so I absolutely see this company as a buy now. And if you want to know another company that I think it's a buy now for other reasons, watch this video on IDEX stock. The video on the screen right now are the latest news on IDEX stock. So click on the video.